as of today, and we
Good
undertake no
afternoon. My
obligation
name is
to update these
Krista, and I
statements
will be
as a
your
result
conference
of new
operator
information or
today.
future
At
events.
this time, I would like to
During this
welcome
call, we will
everyone
present
to
both
the
GAAP
Meta
and
fourth
certain
quarter
non-GAAP
and
financial
full year
measures. A
2024 earnings
reconciliation of
conference
GAAP to
call.
non-GAAP measures is
All lines
included in
have been
today's
placed
earnings
on mute
press
to
release.
prevent any background
The earnings
noise.
press release and
After
an
the speaker's
accompanying investor
remarks, there will be a
presentation are
question and
available on our
answer
website
session.
at
If you would like to ask a
investor.atmeta.com.
question, please
And
press
now
star
I'd like to
1
turn the
on your
call over to
telephone
Mark.
keypad.
All right,
To
thanks,
withdraw
Ken.
your question,
Thanks, everyone, for
again,
joining
press
today.
star 1. And
We
we ask
ended
that you limit
2024
yourself
on a
to one
strong note with
question.
now more
And
than
this call will be recorded. Thank you very much. Kenneth Dorell, Meta's Director of Investor Relations, you may begin.
Thank you. Good afternoon and welcome to Meta Platforms' fourth quarter and full year 2024 earnings conference call. Joining me today to discuss our results are Mark Zuckerberg, CEO, and Susan Li, CFO. Before we get started, I would like to take this opportunity to remind you that our remarks today will include forward-looking statements. Actual results may differ materially from those contemplated by these forward-looking statements. Factors that could cause these results to differ materially are set forth in today's earnings press release and in our quarterly report on Form 10-Q filed with the SEC. Any forward-looking statements that we make on this call are based on assumptions as of today, and we undertake no obligation to update these statements as a result of new information or future events. During this call, we will present both GAAP and certain non-GAAP financial measures. A reconciliation of GAAP to non-GAAP measures is included in today's earnings press release. The earnings press release and an accompanying investor presentation are available on our website at investor.atmeta.com. And now I'd like to turn the call over to Mark.
All right, thanks, Ken. Thanks, everyone, for joining today. We ended 2024 on a strong note with now more than 3.3 billion people using at least one of our apps each day. This is going to be a really big year. I know it always feels like every year is a big year, but more than usual, it feels like the trajectory for most of our long-term initiatives is going to be a lot clearer by the end of this year. So I keep telling our teams that this is going to be intense because we have about 48 weeks to get on the trajectory that we want to be on. In AI, I expect that this is going to be the year when a highly intelligent and personalized AI assistant reaches more than 1 billion people, and I expect Meta AI to be that leading AI assistant. Meta AI is already used by more people than any other assistant, and once a service reaches that kind of scale, it usually develops a durable long-term advantage. We have a really exciting roadmap for this year with a unique vision focused on personalization. We believe that people don't all want to use the same AI. People want their AI to be personalized to their context, their interests, their personality, their culture, and how they think about the world. I don't think that there's just going to be one big AI that everyone uses that does the same thing. People are going to get to choose how their AI works and what it looks like for them. I continue to think that this is going to be one of the most transformative products that we've made, and we have some fun surprises that I think people are going to like this year. I think this will very well be the year when Llama and open source become the most advanced and widely used AI models as well. Llama 4 is making great progress in training. Llama 4 Mini is done with pre-training, and our reasoning models and larger model are looking good too. Our goal with Llama 3 was to make open source competitive with closed models, and our goal for Llama 4 is to lead. Llama 4 will be natively multimodal. It's an omni model, and it will have agentic capabilities. So it's going to be novel, and it's going to unlock a lot of new use cases. And I'm looking forward to sharing more of our plan for the year on that over the next couple of months. I also expect that 2025 will be the year when it becomes possible to build an AI engineering agent that has coding and problem-solving abilities of around a good mid-level engineer. And this is going to be a profound milestone and potentially one of the most important innovations in history, as well as over time, potentially a very large market. Whichever company builds this first, I think is going to have a meaningful advantage in deploying it to advance their AI research and shape the field. So that's another reason why I think that this year is going to set the course for the future. Our Ray-Ban Meta AI glasses are a real hit, and this will be the year when we understand the trajectory for AI glasses as a category. Many breakout products in the history of consumer electronics have sold 5 to 10 million units in their third generation. This will be a defining year that determines if we're on a path towards many hundreds of millions and eventually billions of AI glasses, and glasses being the next computing platform like we've been talking about for some time, or if this is just going to be a longer grind. But it's great overall to see people recognizing that these glasses are the perfect form factor for AI, as well as just great stylish glasses. These are all big investments, especially the hundreds of billions of dollars that we will invest in AI infrastructure over the long term. I announced last week that we expect to bring online almost a gigawatt of capacity this year, and we're building a 2 gigawatt and potentially bigger AI data center that is so big that it'll cover a significant part of Manhattan if it were placed there. We're planning to fund all of this by, at the same time, investing aggressively in initiatives that use these AI advances to increase revenue growth. And we've put together a plan that will hopefully accelerate the pace of these initiatives over the next few years. That's what a lot of our new headcount growth is going towards. And how well we execute on this will also determine our financial trajectory over the next few years. There are a number of other important product trends related to our family of apps that I think we're going to know more about this year as well. We're going to learn what's going to happen with TikTok. And regardless of that, I expect Reels on Instagram and Facebook to continue growing. I expect Threads to continue on its trajectory to become the leading discussion platform and eventually reach a billion people over the next several years. Threads now has more than 320 million monthly actives and has been adding more than 1 million signups per day. I expect WhatsApp to continue gaining share and making progress towards becoming the leading messaging platform in the US, like it is in a lot of the rest of the world. WhatsApp now has more than 100 million monthly actives in the US. Facebook is used by more than 3 billion monthly actives, and we're focused on growing its cultural influence. And I'm excited this year to get back to some OG Facebook. All right, so this is also going to be a pivotal year for the metaverse. The number of people using Quest and Horizon has been steadily growing. And this is a year when a number of the long-term investments that we've been working on that will make the metaverse more visually stunning and inspiring will really start to land. So I think we're going to know a lot more about Horizon's trajectory by the end of this year. This is also going to be a big year for redefining our relationship with governments. We now have a U.S. administration that is proud of our leading companies, prioritizes American technology winning, and that will defend our values and interests abroad. And I am optimistic about the progress and innovation that this can unlock. So this is going to be a big year. I think that this is the most exciting and dynamic that I have ever seen our industry. Between AI, glasses, massive infrastructure projects, doing a bunch of work to try to accelerate our business and building the future of social media, we have a lot to do. And I think we're going to build some awesome things that shape the future of human connection. As always, I am grateful for everyone who's on this journey with us. Thank you. And here's Susan.
Thanks, Mark, and good afternoon, everyone. Let's begin with our consolidated results. All comparisons are on a year-over-year basis, unless otherwise noted. Q4 total revenue was $48.4 billion, up 21% on both a reported and constant currency basis. Q4 total expenses were $25 billion, up 5% compared to last year. Before I cover the specific cost lines, I would note that our fourth quarter expense growth rate reflects a 13 percentage point favorable impact from legal accrual reductions in Q4 and lower year-over-year restructuring costs. In terms of the specific line items, cost of revenue increased 15%, driven mostly by higher infrastructure costs. R&D increased 16%, primarily driven by higher employee compensation and infrastructure costs, which were partially offset by lower restructuring costs. Marketing and sales were approximately flat year over year. G&A decreased 67%, driven mostly by lower legal-related expenses due to a $1.55 billion reduction in legal accruals related to certain legal proceedings. We ended the year with over 74,000 employees, up 10% year over year, with growth primarily driven by hiring in priority areas of monetization, infrastructure, generative AI, Reality Labs, as well as regulation and compliance. Fourth quarter operating income was $23.4 billion, representing a 48% operating margin. Our tax rate for the quarter was 12%. Net income was $20.8 billion, or $8.02 per share. Capital expenditures, including principal payments on finance leases, were $14.8 billion, driven by investments in servers, data centers, and network infrastructure. Free cash flow was $13.2 billion. We paid $1.3 billion in dividends to shareholders, ending the year with $77.8 billion in cash and marketable securities and $28.8 billion in debt. Moving now to our segment results. I'll begin with our Family of Apps segment. Our community across the Family of Apps continues to grow, and we estimate more than 3.3 billion people used at least one of our Family of Apps on a daily basis in December. Q4 total Family of Apps revenue was $47.3 billion, up 21% year over year, and Q4 Family of Apps ad revenue was $46.8 billion, up 21% on both a reported and constant currency basis. Within ad revenue, the online commerce vertical was the largest contributor to year-over-year growth. On a user geography basis, ad revenue growth was strongest in Rest of World at 27%, followed by Asia Pacific and Europe at 23% and 22% respectively. North America grew 18%. In Q4, the total number of ad impressions served across our services increased 6%, and the average price per ad increased 14%. Impression growth was mainly driven by Asia Pacific. Pricing growth benefited from increased advertiser demand, in part driven by improved ad performance. This was partially offset by impression growth, particularly from lower monetizing regions and surfaces. Family of Apps other revenue was $519 million, up 55%, driven primarily by business messaging revenue growth from our WhatsApp business platform. We continue to direct the majority of our investments toward the development and operation of our Family of Apps. In Q4, Family of Apps expenses were $19 billion, representing 76% of our overall expenses. Family of Apps expenses were up 5%, primarily due to growth in infrastructure costs and employee compensation, which were partially offset by lower legal-related expenses. Family of Apps operating income was $28.3 billion, representing a 60% operating margin. Within our Reality Labs segment, Q4 revenue was $1.1 billion, driven by hardware sales and up 1% year over year. Reality Labs expenses were $6 billion, up 6% year over year, driven primarily by higher infrastructure costs and employee compensation, partially offset by lower restructuring costs. Reality Labs operating loss was $5 billion. Turning now to the business outlook. There are two primary factors that drive our revenue performance: our ability to deliver engaging experiences for our community and our effectiveness at monetizing that engagement over time. On the first, daily actives continue to grow across Facebook, Instagram, and WhatsApp year over year, both globally and in the United States. In Q4, global video time grew at double-digit percentages year over year on Instagram, and we're seeing particular strength in the US on Facebook, where video time spent was also up double-digit rates year over year. We see continued opportunities